Hi, welcome to Control and Compound with Darren Mitchell. I'm your host, and joining me today is Christina Wyatt, wealth coach at Control and Compound Financial. Christina, how are you?
Hey Darren, I am doing great. How are you doing today?
I'm doing fantastic. So we have a great topic today. The recession is coming, how to survive and thrive during a recession. So Christina, let's start right off the bat with what is a recession? How do we classify a recession?
So, a recession is a prolonged downturn in economic activity. So, that is what a recession is by definition. The rule of thumb to decide if we are in a recession or not is two consecutive quarters of negative growth in a country's GDP. So, that's the rule of thumb in how we would determine economically if we are in a recession.
Okay, and there's the U.S. economy, the first two quarters of this year were negative GDP growth. So the traditional or technical definition of recession, they'd be in a recession now. Now there's debate going on whether they're really a recession or not a recession. It doesn't matter. Everyone talk to everyone on the street. We're we're entering a tough period of time. Everybody knows it. All the business leader economists know it. So whether it's technically a recession this quarter or next quarter or 2023, the recession is coming. Now in Canada, we haven't technically entered any recessionary periods. We haven't had that two quarters of negative growth, but growth severely diminished. And, you know, let's not kid ourselves. The old expression, if the U.S. sneezes, Canada catches a cold. So just about every time we went into recession, or the U.S. went into recession, Canada went into a recession. So, you know, that's kind of the technical interpretation. But how does it affect me, or how does it affect the average person? Like, what happens during a recession?
Yeah, well, whether we're in it or not, you see, Google put out some stats that more Canadians are Googling recession right now than ever before, even through the others. So Canadians are concerned about it. It is a hot topic. They are talking about it. And how is it going to impact them? Well, we're already seeing it impact them, right? We're talking, we just did the recent podcast on inflation. With inflation up, we're seeing that trying to be, taken back with interest rates that are rising, and those interest rates are affecting Canadians right across the country. That increase in interest rates, whether it be on your mortgage, your lines of credit cards, like that's going to impact everybody in some shape or form, which is, yeah, so it's impacting, and people are thinking about it, and they're we're looking into it and trying to learn how we can combat it, I guess, how we can survive and thrive and get through it is what we're looking to do.
Yeah, and I think we have a couple of Warren Buffett quotes today, Christina. But I want to read this first one. Like, you know, every time we've had a recession, guess what's happened? We've had a recovery. So to have the right attitude going into this, Warren Buffett's line I love is, in short, bad news is an investor's best friend. It lets you buy a slice of the future at a marked down price. So things are going to be on sale, but you've got to be prepared mentally and financially to take advantage of that. So let's pivot into what can we do as investors, or what can the average investor do out there to prepare themselves for the coming recession, to survive and thrive. So Christina, what would be the number one thing you should be doing in a recession to survive and thrive?
Well, Darren, I know you just quoted Warren Buffett, but I want to quote him again because he did just at a recent Berkshire Hathaway shareholders meeting. He was asked, what is the best, like, how do you protect in a recession? What's the best thing to do? And he said, investing in yourself is the best thing you can do. Anything that improves your own talents. So we talk about that a lot at Control and Compound. We talk about investing in you. You sure he didn't steal it from you, Darren?
I think Warren Buffett stole Darren Mitchell's idea. I think I should sue. Maybe he came up with it first. Regardless, doesn't matter who came up with it first. The point is, it's good strategy. invest in yourself.
Exactly. Any investment in yourself is going to make those returns. So as you're working on them now, that's going to come tenfold as we build and get through this recession. If you're able to increase your skills, to increase your lifelong income, that's going to do wonders for you. Like that's going to give you some extreme returns long term investing in yourself. So that's one surefire thing that you can do during a recession, that's going to help you survive and thrive.
Yeah, and that could be getting a coach, taking a course, watching or listening to the podcast to learn a new skill. But anything you can do to make you better. If you could increase your income is your greatest earnings potential in your life. And if you can do something to increase that earning 10, 20, 30, 50, 100%, that's going to be the biggest impact. And if you do that well, recession's nothing because you're going to be making a lot more money and better equipped to deal with that. So where are we? Let's jump into what's the second thing. Invest in yourself was number one. What's the second thing? And for me, Christine, it's probably access to capital. I remember 2008. That's really where my infinite banking career launched after that because of the 2008 recession where I felt hopeless and didn't know what to do with me for my money and my clients' money and had to change my way of thinking. I got a new skill. After the 2008, I've got a new skill. But one of the lessons I learned in 2008 was access to capital. And there's really three things that business owners, real estate investors, and individuals should be doing if they want to position themselves. Number one, cash. Cash is still king. You need cash. You need to have a pile of cash. You need to have as many lines of credit or access to money that you possibly can. So if you're a business owner, I don't care if it's plant, equipment, buildings, you want anything you can collateralize. You want to set up that you have access to money. For the real estate investor, it's refinancing your properties. For the homeowner, it's getting that HELOC set up. Anything you can do to give yourself access to money. And then the third thing within access to capital, Christina, this is our favorite one, of course. What's the best place to park money to position it so you have control, liquidity, use, and control over your money?
That's going to be in our infinite banking policies, right? These policies we set up for this specific time. Like this is what we set them up for when opportunities come. Recessions aren't all doom and gloom. Like the majority of the billionaires out there became billionaires during a recession. This is when the rich get richer. And why? Because they have access to capital, just like what you're saying, right? They have access to money so they can buy in these down markets. It's so funny. I find, people love a good sale at the grocery store. They love a good sale. But when they think of it on the recession side, that's what we're in. We're in a good sale. So we need access to money so we can take advantage of those sales that are out there. And our infinite banking policies are that. They're it, right? We've got those unstructured loans. You get them when you want, when you need them. There's no questions asked. Our money's growing, keeping up with that inflation, right? We've got our money inside growing, keeping up with inflation. We've got access to it, control of it. Now I'm going off because I'm getting excited about having that set up in a recession, looking for those opportunities. But definitely one of the best place in my mind to park your money during a recession is to have access to one of these.
Yeah, so let's talk about 2008. A lot of people had money in the stock market and real estate market, and both those crashed, and banks stopped loaning money, or it was really very difficult to get money, so they didn't have access to money. Well, the same thing's kind of happening now, right? The lines of credit, they're changing. They may reduce some lines of credit. Well, they can't reduce your infinite banking policy loan. When you borrow money, it's contractual. You can borrow 90%, and it never goes down. So everything's going down now. We've got everything dropping this year. The infinite banking dividend rates for our four companies we use have either stayed the same or gone up, and they're all around 6% plus now. So think of that. All this bad stuff going on. We've been talking for years about building the base of your financial plan has to be a place of control, cash and cash value life insurance. Well, this is why we did that. Opportunities are going to come and emergencies are going to come, and we're entering potentially the greatest opportunity of your life in the next few years. So how do you position yourself to take advantage of the great financial opportunity of your life, you make sure you have access to capital to do that. That's infinite banking, that's lines of credit, and that's cash. So, I tell that story, Christina, you've heard it a bunch, but, when I was at that conference years ago in Florida, and this accountant got up and he spoke, and he talked about the 2008 recession, and he goes, every single one of my clients, wasn't an insurance guy, he was an accountant. He said, every one of my clients that had access to money in 2008 is significantly wealthier today than any of my other clients. And he talked about the guy who was able to access $1 million loan against his cash value policies, his cash value life insurance policies. And this guy bought 13 additional franchises at 30 cents on the dollar. Ended up making millions and millions of dollars because he had access to money. Okay? One of the smart guys in the room put his hand up and goes, was the policy loan interest rate 5 or 6% on that loan? And the accountant's like losing his mind. Who gives a blank? He goes, the guy made millions of dollars because he had access to money. So back to those infinite banking policies, lines of credit, get access to money. Don't get hung up on whether your interest rate's half a point higher or lower. The key is access to capital is what's going to allow you to take advantage of massive opportunities. And we're entering a period of time that could be the greatest financial opportunity of your life.
Exactly. We do get that question. I saw the question come up not that long ago. But isn't there an interest rate with that policy loan? Well, yeah, there's an interest rate, but if you can earn triple, does it really matter? Like, I don't mind spending 1,000 to make 10,000. Like, that doesn't bother me one bit, right? And that's how, when you're talking about getting these lines of credits and stuff set up, yes, we're seeing interest rates go up. But do you really mind spending that interest rate to be able to make that money? Not at all. Not at all.
I don't want to triple my money if I have to spend 1% more in the borrowing costs. Like, focus on the big
It's a mind shift, though. It is a mind shift. You've got to think, and you've got to think around that. And obviously, that gentleman in the room didn't have the mind shift. Quite obviously, if he was asking what the interest rate was, that the concept of the story didn't quite drive home. So, but yeah, no, for sure, having access to that money, whatever the interest rates are at that time, you just got to do the math out on the return. And in these types of times, when you have those opportunities, the math is incredible. Like these returns, 30 cents on the dollar, right? Like these returns are incredible. It makes sense to have access to that money, whether you've got to pay the interest rate or not.
Yes, great, phenomenal opportunities coming our way. Okay, what about number 3, Christina? What do we do survive? What do we do to survive and thrive in a recession?
Well, in tough times, we need hard assets and hard people. So what do I mean by that? I know it's the hard assets and hard people, but hard assets, right? You want hard assets. You want real estate. You want gold. You want silver. You want to have those hard assets available.
Yeah, that could be like land, buildings, real estate, plant, vehicles, a fleet of vehicles, like, even collectibles and stuff. Some people will go, but physically hard asset, and that hard asset is physically backed by a physical asset. It's not a paper asset. It's not like a stock or a future or an option. This is a hard asset physically backed by something. And I love your hard people, but you need to have the fortitude and the resolve to make those hard decisions when everyone else is running away from this whatever's going on. You're running to it, and you're running to it and say, where do I find my opportunities? And that's hard for people. That's hard for people when everyone else is saying panic, 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 for you to jump in and say, don't panic, time to buy. But that's hard assets, hard people. Every other recession we've gone through, those hard assets have survived and thrived during those. So we've got to do that. And anything else there before we jump to number 4, Christina?
Well, I think it just flows very nicely into number 4, right? Those hard people. Like the number 4 thing that you can do is have the mindset, have the right mindset going into this, which is kind of what we talk about with the hard people and knowing, you just take the emotion out of it. Sometimes, when we hear recession, people panic. It's the first thing that people are going to do. You do not want to panic. You want to stay calm, stay collected, and really take advantage of those buying in opportunities, right? Everything's on sale. It's just like if there was a sale at your favorite store. You're not going to panic. You're going to get excited because you're going to be able to get in and buy some of these things that you might not have had the opportunity to do before, right? You might not have ever been given this opportunity in the past. In some cases, you really should be a bit excited about it.
Yeah, and that's a tough mindset for people to say, recession's coming, phenomenal news. This could be an opportunity of a lifetime, right? And to have that mindset when everyone sees the recession and you go, no, I see an opportunity, that's huge. I mean, Henry Ford, I love his line. He said, if you think you can or you think you can't, either way you're right. So you can think this is going to be terrible, or you can think this is going to be an incredible opportunity. One of the things I like to tell people is look back at a chart of prices. I don't care if it's real estate prices, stock market, but look over a 20, 30, 40, 50 year period and you see the chart go up and down and you see these big dips. Now, if you could go back in time, where would you want to buy the most of where would you want to buy along that graph with these massive dips?
The bottom, the dip. I want to buy at the dip.
Exactly. So if we look back in history and we go, wow, I wish I could have bought at that dip and that dip and that dip, I would have been, wow, I would have got in at the perfect time. It would have been wonderful. Well, guess what? We're entering another period where there's going to be a dip. And do you want to be in 10 years saying, I wish I had taken advantage of that dip? Or do you saying, wow, that was the biggest move I made financially to improve my financial well-being for my family? So have that mindset when there's crisis, when there's chaos, amazing opportunity presents itself. And in order to do that, you've got to have the right mindset. You've got to have access to cash. Hopefully an infinite banking policy is the ideal place. Invest in yourself, invest in hard assets. That's how you survive and thrive a recession. What else do we have there on mindset, Christina?
Well, I just want to mention on the other side of the dip. So if you're in the dip and your money's in the dip, as we just said, historically, if you look at those charts, the market is going to come back up, right? It typically does repeat itself. Recessions on the average last up to 9 months or so, in between 3 to 9 months. So it's not going to be here forever. And you got to stick to your plan. So you don't lose in the stock market unless you pull out, right? And that's what people do in that mind shift, or the mindset is they panic and they sell and they pull out. And you don't technically lose unless you sell. So if you can ride out that dip, you can wait it out without that panic, you're going to come out on top of this a lot better. So I was listening to a Dave Ramsey segment or YouTube video the other day, and he said the only people that die on a roller coaster are those that jump off, right? Like, it's going to feel like a roller coaster. Do not check it every day. Don't look. If your money are in stocks right now, please do not check them every day. Leave it, let that roller coaster ride, and come back out of that dip, and then make your decisions at that point in time, not based on emotion. So the emotion does come into play on both sides of it. You don't want to jump off a roller coaster. It's not fun.
There's a lesson for the day. Don't jump off a roller coaster. So let's just wrap up. We get one last Warren Buffett quote when we go back to investing in yourself. I love this quote. He goes, go to bed a little smarter each day. So try to learn something each day, put it back, invest in you, invest in your business, invest in your properties, and don't be afraid of a recession. Look at it as an opportunity of a lifetime. Thanks for watching. Thanks for listening. Have a wonderful day. Thanks for tuning into this episode. Don't forget to like, subscribe, and hit that bell button so you always know when new content is coming out. For more helpful tips and tricks, visit our Instagram, Facebook, or TikTok pages at Control and Compound. If you want to reach out to us directly or work with us, visit our website at controlandcompound.com. The links are in the show notes below. See you next episode.